Thank you for tuning in to another great video by Destiny. Over the years, Margaret Lomas has answered hundreds of viewer questions about many aspects of property investing. Here's one of them.
Hi Margaret, I have a duplex approved vacant block in Marsden, Queensland. The block size is 928 metres square. I don't want to build two houses or units that are attached. I've checked with the council and they've informed me that it is possible to have two detached houses built on that block, or we can subdivide into two blocks. Subdivision costs come to around $40,000. Now I'm trying to figure out whether it's better to have the block subdivided into two lots and then build a house on each, or build the two detached houses without subdividing. What do you think I should do? Well, it seems like you've already done a lot of due diligence in considering the true cost of this subdivision, so well done. Often people don't consider this big picture and instead rush ahead, only to find out too late that the costs exceed the benefits. Now, it is true that most often two separately titled blocks can fetch a better valuation than a single titled two-dwelling lot. In my experience, the difference is between $30,000 and $50,000, depending on where the block is. However, usually the rental returns remain the same. Tenants are rarely aware that the title arrangements aren't subdivided and won't know whether they're on a separately titled dwelling or not. You need to consider your personal circumstances before working out if it's worthwhile spending the money now or later. Here are some things for you to think about. If you'll be relying on equity to allow you to leverage into more property, you might want every cent of that equity that you can get. It's possible that subdividing now will allow each individual block to gain value at a greater rate, giving you more overall equity and allowing you to leverage into more property sooner. That extra $10,000 to $20,000 in equity might add up to $100,000 in borrowing capacity, subject to you qualifying, and you could then acquire more property now. On the other hand, if you have plenty of equity elsewhere in other property and you're not stopped from further leverage, I can't see the point in subdividing at this stage. Keep the money and use it to pay down debt, which in itself will provide some more leveraging power. Down the track, when you wish to liquidate your portfolio to access retirement funds, you'll probably want to subdivide then, as it'll be easier to sell two separate blocks, and you should get a higher price for each than you could get for the two combined.
We hope you've learned something from watching this video. If you'd like to ramp up your own property investing, give us a call at Destiny now. You can join in on our fabulous essential property education courses held all over Australia and learn everything there is to know about property investing. Call now on 1300 693 378 or visit our website destiny.com.au. To watch more great video, go to destinylive.com.au.